Good morning. We will pay attention to depreciation on fixed assets today. We will spend time on the cost price method. That's also called the straight line method, or it can be called fixed installment, or they can say that they're going to calculate it over a period of 5 years. According to this method, an equal amount is allocated to each accounting period over the useful life of the asset. So it means if we decide that we will use this asset for a 5-year period, we will write down equal amounts every year for 5 years. The reason for this is that we want to spread this depreciation of the asset over the 5-year period, that we can show every year a portion of the depreciation as the expense to reduce the profits, that we will not reduce the full amount at the end of the period. The following information of Malotto Stores is available on 31 December 2011. New equipment was purchased for $10,500 on 1 January 2011. So on the first day of the year, we bought equipment for $10,500. So in the first year, we will write off depreciation on the cost price over a period of 5 years. So you can take the cost $10,500, divide by 5 years, and every year you write off 2,100 Rand. Or you can say you want to write off 100% of the value over a period of 5 years. So that means that we will write off 20% each year. So you will, with both methods, get the same answer. So the date that we purchased it was the 1st of January 2011. The cost was $10,500. There is no depreciation at the beginning. So the first day, this value of is $10,500. At the end of 2011, we write off that 2,100 Rand depreciation. Now the total accumulated depreciation that accumulate at the end of the year is 2,100. And what is the value of my vehicle or equipment now? The 2,100 deducted from 10,500, and that gives me 8,400. In 2012, we will write off 2,100 again. Now the depreciation will accumulate from 2,100 plus this 2,100. So the total amount now after 2 years is 4,200. What is the carrying amount? It's the 10,500 minus the 4,200. So it is worth 6,300 at the end of the time. 2013, we write off 2,100 again. So my accumulated depreciation was 4,200 plus this 2,100 gives me 6,300. What is my asset worth? 10,500 minus 6,300. So the carrying amount is now 4,200. At the end of 2014, we write off depreciation on the 10,500 again, 2,100. Then we say the previous year it was 6,300 plus the 2,100 gives me 8,400. What is the value of the asset? 10,500 minus 8,400 gives me 2,100. At the end of 2015, we will write off 2,000 again. It will accumulate from 8,400 plus the 2,100, and now the accumulated depreciation is 10,500, and this asset is not worth any money in the books. You can still use the asset, but you've written off the total value of your asset over this 5-year period. And that is the purpose of depreciation, that you will take this annual depreciation every year to the income statement. So every year you will show an expense of 2,100. In your balance sheet, you will show every year what is the carrying amount of the asset. So you will take the cost price less the accumulated depreciation to work out the carrying value. If we work on the cost price method, it means that we want to write off this asset over a period of 5 years. So the end value must be naught, and your total accumulated depreciation after 5 years must be 10,500, because you want to write off this full cost price of 10,500. If we look at the ledger account, on the 1st of January, we bought equipment for 10,500. The first year we wrote off 2,100, so we debited depreciation, that is the expense. Expenses increase on the debit side and decrease on the credit side. I debit depreciation to show that I've got an expense, and I credit accumulated depreciation. Equipment is my positive asset, and accumulated depreciation is my negative asset. So that means that these two accounts, equipment and accumulated depreciation, forms a unit. When I record it in the balance sheet, I will take the equipment amount less the accumulated depreciation amount. Okay, that means at the end of the first year, we have an expense of 2,100, and we will transfer that 2,100 to the profit and loss as expense to reduce our profits. So the profit and loss will be debited in the first year with 2,100. In the second year, we will write off depreciation again to increase my expenses. And my double entry, I increase accumulated depreciation with 2,100, add the two together, and I see that the accumulated depreciation at the end of the second year is 4,200. So in the balance sheet at the end of the second year, I will say that equipment was cost 10,500 minus 4,200, so it's actually worth 8,100 Rand. And I will close off this depreciation to the profit and loss account 2,100. In the third year, I will write off depreciation again 2,100. I will credit accumulated depreciation, add the two together to see that the total accumulated depreciation is 6,300. So that is what we do every year. We calculate the depreciation, debit depreciation to increase the expense, credit accumulated depreciation so that this amount can accumulate every year until the total accumulated depreciation will be equal to the cost price. What did we learn? According to the cost price method, the cost price of the asset is written off in equal amounts over the useful life of the asset. So we will write off the same amount every year if we bought it on the first day of the financial year. Depreciation is written off according to the number of months the asset was used in the current financial year. So if we buy the asset in the middle of the year, we will only write off depreciation for 6 months. If we buy the asset on the 1st of October, we will only write off depreciation for 3 months. Depreciation is expense and is therefore debited. Accumulated depreciation is a negative asset and it will be credited to accumulate the amount until it's equal to the cost price. Depreciation is written off as expense to the profit and loss account. The accumulated depreciation at the end of the final year must be equal to the cost price. And every year we will deduct the accumulated depreciation from the cost price so that we can determine what is the carrying amount. When the accumulated depreciation is equal to the cost price, you are not allowed to write off any more depreciation. So you can only write off depreciation until the accumulated depreciation is equal to the cost price.